Hi, it's Joseph May from CMG Home Loans. And as previously discussed in my last two videos, if you're planning to purchase a home in the next 3 to 6 months, the first steps of the home buying process is to ensure that you have a very thorough pre-approval or even a full mortgage pre-commitment before you find a home. And it's also important that you know the amount of the monthly housing payment that you qualify for, that you're going to be comfortable making that payment, and you also know the total amount of money that will be needed to complete the transaction. Having this information before you find a home is not only important, it's a great advantage to you. It gets you financially prepared, it makes sure that you're looking in the right price range, and it will help you make better decisions when it comes time to make an offer. And most importantly, it can make your offer stand out amongst others and you have a better chance of getting your offer accepted. Today I want to educate you on credit reports and credit scores. Your credit report plays a major role in your ability to get your mortgage approved, and your credit scores play a role in the price of the loan. When you have your credit report run for a mortgage, you will typically get a triple merged credit report. You see, there are 3 major credit reporting agencies: Equifax, Experian, and TransUnion. Each of the credit bureaus use a different scoring model, so you'll end up with 3 credit scores. Now, there are many scoring models, but the 3 credit scoring models that are used when running your credit for a mortgage are FICO version 2, FICO version 4, and FICO version 5. Once the 3 scores are obtained, the highest score is crossed out, the lowest score is crossed out, and you're left with the middle score, which is the determining score for your loan approval and the price of your loan. When we talk about conventional financing, the top tier credit score is 740 and above. Then every 20 points lower brings you into a lower tier. It's important to note that there are many scoring models. For example, if you get a credit card statement that has a credit score on it, that's typically your FICO version 9 score. If you use Credit Karma has their own scoring models. These models can be helpful to give you an idea of your credit profile, but typically those scores will be higher than your middle score on your official credit report. If your credit is not top tier, there are things you can do before you find a home to improve your credit score. But you must be careful, because there's a lot of misinformation out there, and if you do the wrong thing, your credit score will actually drop. A few tips to make sure your credit score doesn't go down. Don't apply for any debt consolidation loans or any debt payoff plans. Don't attempt to pay off an old charge-off or an old collection account. Don't close any credit cards or credit lines. Don't apply for any new credit cards or credit lines. Don't lease a new car. Don't transfer any balances from one card to another. And don't refuse to pay a medical bill even if you believe it should be covered by your insurance. A few tips to help your credit score go up. Pay your credit card bills the day they come in. Limit the usage of your credit cards. Pay down your credit card balances to 30% of the credit limit. Start by paying off the lower limit credit cards first. Feel free to contact me to go over all of this in detail and get some additional tips and tricks on how to improve your credit score before you find a home. And feel free to share this video with anyone that might benefit from this information. Thanks for listening, and I look forward to helping you in any way I can.